Good day, fellow investors. So a comment here: I bet that any investment in a Nasdaq ETF today will beat you over the next 20 years, because I said here that I don't like the risk and reward of the markets. Of course, the Nasdaq didn't beat me in the last 20 years, we'll discuss that, but I want to discuss here the relative investing trap versus absolute investing. I personally do not care what the market does, because I'm not here to compete with the market. Even if everyone wants in finance to make it the competition, but I will show you how dangerous that is, and then discuss absolute investing that makes life much more easier. So let's start with beating the market. So here we have the Nasdaq, and yes, over the last 21 years since I started investing, it went up 10 times. Okay, great performance. But if you look at the S&P 500, we are already at around 4 times, so not 10 times. If we look at the FTSE, okay, from 2002, not even 2 times. From 2000, you didn't make much money. So the first question when it comes to beating the market is, what market? There are many markets there, and you'll see later some do well, but some don't do well. How will the S&P 500 or Nasdaq perform in the next decade, 2 decades? It's hard to know now. The second point, apart from choosing markets to invest or beat, is, let's say that the market is down 50%. You're down 30%. Are you happy because you did beat the market? Or you are sorry because you lost 30%? So that's also something I don't understand. The obsession with beating the market but being happy with losing money. That's what pension funds always discuss. If they are better than the market, they are the best investors out there, or investment managers, but still losing 30%. That's something I don't buy. The third point I want to discuss when it comes to the market, of course, at the peak point of ARK ETFs and Cathie Wood, the assets went to 60 billion. I was getting 5 emails a day. Sven, you need to invest in the innovation ETF. What's the new thing? The world is going to change, and the fortune. And based on their past opportunities, based on their past performance, how they beat the market, and that's what made them famous, and people thought, okay, that's all that exists. I don't need to show you the ARK ETF charts, right? Then there were some others like Fortune, the next Warren Buffett, etc. And when it comes to these things, yes, beating the market, but who got a lot of money from beating the market for 2 years? 60 billion in assets, inflows, huge influx, which makes a challenge to maintaining your returns. Actually, the outflux was later the bigger challenge. But simply, if you beat the market for 2 years, money comes flying to you because you are the next Warren Buffett. But nobody thinks about the risks those people are taking to beat the market. So that's also a third point of chasing that performance or just playing the market. But then again, we have discussed how the market is risky now, so you have to see how that fits you. So I prefer something that is absolute investing that I did over the last 20 years. It worked well for me, and that is my truth, my story, and I'm happy to share. So I started investing somewhere in 2002, accumulated, every salary went into stocks. Then up to 2005-06, I made 5x on that money. One stock that I bought at 10 went here to 140, but I sold most of it at 60. So I missed this huge jump, but I was happy here. Why? Because I was happy with the 3% dividend that I was getting, plus the growth, happy owning those businesses. When that changed and the dividend of 3% became 0.5% here, as emerging markets boomed, I was not happy owning things, and then I sold. And now the question comes, Sven, you are timing the market. No, I am just owning what I like and not owning when I don't like something. Whether that's timing the market, I don't care about the market. When I like, I buy. When I don't like, I don't. As simple as that. Because, of course, you can't time the market. Nobody can predict the market. As I said in the recent video, the S&P 500 can be 10,000 points in the next 5 years. That's very possible. But you can look at the fundamentals and see how those fundamentals fit you. As I said, this is 50-50 chance for the S&P 500 to give you a negative return or a very good positive return. What am I paid for owning the S&P 500? I simply don't like these 1.63% for the risk. Then 2009 came, I lost about 20% in the recession with the money I left in the stock market, which was much less than what I took out, but okay. 2009 came and suddenly I had businesses that there was a dividend of 8% plus growth. I was again a happy owner of things. This is a Croatian company here. I was buying in 2009, 2011 at around 100, 150 euros, sold somewhere in 2015 at around 350, 400 plus dividends. So I again made around 4 times my money till 2015, and now the company took over and it is delisted. So I was happy owning, and that's usually the opposite of what people do. If we look at what people do, people try to time the market, beat the market, run to ARK investments and things like that. And for 20 years, from 1999 to 2019, the average investor did 2.5, the S&P 500 did 6.1. Huge difference for 20 years. So I prefer a little bit different investing, so that worst case scenario, I don't lose money, but you need to have a 7-year investment horizon. Be happy owner, thus be happy with how much you are paid for the risk you are taking of investing. And exactly that, not caring about the market gives me a huge advantage because I focus on the fundamentals, I look from my returns from the fundamentals, and not caring about the market makes me buy when I like something for the fundamentals, usually when most people are selling. So if we look at my history, what I did over time, the Nasdaq did 10x, 2002, 2006, 4x, then I lost 20% during the crisis, then again a 4x to 2015. Here we bought a house on which we made 150x, so I even had just a little bit of stocks, but did something. 2018, Nevsun did very well. Then I started my research platform, did also very well, bought another house. So let's say 2x just to be conservative. When I sum this up, 25x, the Nasdaq, the best market from 2002, who was buying here? Here, yes, everybody, but who was buying here did just 10x. I hope to continue this. I think I'll have a much easier job now that the Nasdaq is close to all-time highs rather than here or here. So see you in 20 years. This is just my story, just a hope to motivate you to focus at fundamentals, focus at value, and check maybe what I do if you like the attitude towards investment that we have here on the channel. Thanks for watching. I'll see you in the next video.